station of TFNN. The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the May 20th terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a great evening and a good trading session yesterday. Let's do everything we can to make today's trading session even better. Now, my outcome for the next hour or two is to teach you how to master the tools for trading. And that includes the tools of the mind, because when you and I, when we can master the tools of our mind, well, we begin to think like a strategist. So during the next hour, you'll hear me use terms like A to B equals CD. You'll hear me use terms like swing points, Gartley patterns, and various candlestick signals that the bulls and the bears, what I call the sign makers of the markets, what they create for you and I each day. And each of these signals, each of these patterns are in a category of what I call tactical tools. And knowing how to identify these signals, these tools, all these tactical tools on a chart, it's really important. But you see, the real key to trading, the real key to investing, the real key to getting your money to work harder for you than you do for it is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook. Now, don't confuse the terms failure and losing money as the same thing. In trading and investing, our spoilage is money. Much like the leftovers from a meal, that you end up throwing away for the most part, or maybe it's just simply food that went bad in your refrigerator and you had to throw out. There's spoilage. Maybe it's a sales presentation that you were working on that didn't lead to the actual sale. It's called spoilage. Spoilage and failure are two different things out there. Yes, money, as long as you use stops, as long as you have a strategy, when you lose money, it's nothing more than spoilage. And when it comes to trading and investing, folks, today and every day, let's think like a strategist, because strategists, they slay the tactician all day long. So let's begin our day by getting into a peak physical state with a strong mind. Get that back up, take in a nice deep breath, and let's look at one of our tools. This is the tool I call treat your body like a temple. Ancient scripture says treat your body like a temple. So the question is, do you treat your body like a temple? Something that you take extremely good care of, or do you treat it like a woodshed? Here's the thing. Our mind and our body work together. We've got to have both functioning well. Our body is really the support system of our mind and our spirit. Our body supports us with strength. It supports us with power, and it's the vitality that takes us to where it is we want to go. Now, the cool thing is that we only need 30 to 60 minutes each day to have a strong, healthy body. A few simple things can go a long way. You know about these things. Like take the stairs instead of an elevator. When looking for a parking space, here's a novel idea. When looking for a parking space, don't look for the one at the front door. Look for the one at the end of the parking lot. And in fact, there's a whole lot less competition for those spaces in the back of the lot. And you'll have fewer dings in your door. And you'll be doing something to help improve your life. You'll treat your body like a temple. Put that as the meaning behind getting the parking space in the back. If you don't like to jog, then walk. If you don't like to walk, then swim. If you don't like either of those, then take up a sport. Play tennis. Or if you like golf, have your buddy drive the cart or your girlfriend drive the cart. Haul your clubs while you walk the course. It is all about strength. It's all about strengthening our mind out there. It's the strength of our muscle, and the muscle of the mind, well, it needs the muscle of our body, folks. So treat your body like a temple. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Let's get things kicked off out here right now. Dow futures down 17 points. They're trading out at 16,464. How about that for a Freudian slip? Maybe that's where they're headed to. The S&P futures, they're trading down 2 points out at 18,000. Boy, oh boy. I'm thinking I'm having a little dyslexic number thing going on here. It's trading out at 18.8. Let's see if I can get this one right. NASDAQ futures down 2 points. They're trading out at 36.11. Okay, I'm back on track here. King dollar up 4 pennies, trading out at $80.09 out here. Goldilocks back $5 this morning. It's trading out at 12.88. It's like somebody's got their thumb on gold and silver. And we take a look at the bodies of those candles out there. Silver down, and I don't know what that means. I just know it's a very narrow-banded trading range out there. Maybe building cause to do what? I don't know whether it's cause to go up or down out there. We'll take a look at silver. It's down 9 cents, trading out at 19.26. Light sweet crude off 19 pennies right now. It's trading out at 102.42. Our call-in number is 877-927-6648. Feel free to give me a call. Happy to look at your stock chart. A quick peek across the globe out here. Is this a message of things to come? The DAX is off 24 points. No big deal, 0.25%. FTSE down 43 points. It's trading out at 6,800. In fact, we'll start off by taking a look at the FTSE here. Oftentimes I ignore the international markets out there, and maybe we shouldn't do that. If we take a look at the Nikkei, it was a sea of green in Asia last night, or at least the three indexes that we follow there, the Nikkei, the Hang Seng, the Shanghai. The Nikkei up 68 points, 0.5%. Hang Seng up 0.6%. That's up 130 points. And the Shanghai, kind of unchanged, up 3 points out there. So, yeah, let's go take a look at the FTSE. Why do I want to take a look at the FTSE out here? I don't know. Just want to take a look and see what kind of signals we're getting. So here, the FTSE. FTSE's been traveling in a 430-point consolidation mode out here. Consolidation really beginning back on October 11, 2013. The low of that consolidation is about the 64.30 level. We can see that price has been down to this level two other occasions, once back in December of 2013. Again, back here in February of 2013. The highs of the consolidation, we're going to use the time period of January, middle of January, January 21st to be specific. And that high is 68.67. Price went from the top of the consolidation all the way to the bottom. Then back up to the top. It got back up there in February 25th. 2014, and on its last journey down, really was only able to get back into the morning star reversal pattern out here, the sign of strength area. And this is back from December the 16th. Was only able to get back to that range, then it went ahead and took off again topside. Looked like it was going to break out. That was on May 14th. Of course, it did it with such a small dollar amount that really was not conviction behind the move out here. In fact, let's put the relative strength indicator on the screen. Let's just see where we were at. Let's see, last time up here, back in February, it was where it was towards that overbought condition. In fact, when it was up here back in the January time frame, we're using the 14-period relative strength indicator. It was up towards what? The overbought condition. As it made its lows back here, back in December 16th, it was what? December 15th, December 13th, it was an oversold territory out here. When it made the lows back here in February 4th, it was what? It was in oversold territory. You kind of getting the gist here with regard to utilizing a momentum indicator. And this is just one momentum indicator out here, and the consolidation pattern that's gone on. Is it any wonder, as the FTSE made its way up to the highs back here, May 14th, May 15th, and guess what? It was in what? It was in that close to that overbought condition out here. So now what we've seen here, and what I really need to do is probably expand this consolidation box. Otherwise, I'm going to, I'm going to lose it here. Not lose it, but let me see if I can expand this out a bit so we can, there we go, no problem. So there's our consolidation box. So what does this mean here? Well, at this stage, the FTSE has rejected those highs coming from an overbought condition. So the likely outcome for the FTSE is either move all the way back down to the bottom, or at least a move back down to when it gets into a oversold condition of that 14-period relative strength indicator. Maybe that's going to be 66.55. That's your 0.618 retracement. Perhaps it is 65.90, the 0.786 retracement. We should at least keep these Fibonacci numbers up on our board out here. Now, we just went and took a look at the FTSE. We took a look at, because you see, the chart itself and what it is that we're looking at is what? It's irrelevant. It doesn't really matter. You see, when you take a look at patterns such as this and the consolidation, the key here, a market is doing either one of three things. It's either moving sideways, and what this shows is a sideways movement can be 430 points. That can be a large sideways movement. It's either moving sideways in a consolidation pattern, and from a trading perspective, you want to know where the lows and the highs, because you can play it to either side. And your stops, yes, you must use stops because you and I, we think like strategists. We know we're going to have spoilage. That means we're not going to get every trade right. But what we are going to do is we're going to keep that spoilage to a minimum. We're going to risk no more, no less. Well, you can risk less at times, but no more than 1% of your working capital on any one single trade out there. And if you do that, you will be good for the rest of your life. You will be very good for the rest of your life when it comes to trading and investing. You will all of a sudden realize that you will have spoilage because you're running this like a business and you're going to have winning trades and losing trades. The key is just simply to make more on your winning trades than you do on your losing trades, and as a percentage to try to have more than a higher percentage of winning trades than losing trades out there. So we're taking a look at, and so the markets are doing what? Either moving sideways, up, or down. And why is that important? Why are we even taking a look at this? Well, those of you who've been listening to this 9 o'clock show for quite some time, have been listening to me, you know that the real key here, the real liquidity gauge in the market is what? The Euro-Japanese yen. And when we get back, we'll go take a look at the Euro-Japanese yen. You see, the chart itself that we're looking at is irrelevant. They'll do the same things. And right now, the Euro-Japanese yen is in the oversold condition. What does that mean? 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
That is the truth out there. Welcome back, folks. Thanks so much for joining us on terrific Tuesday. If you didn't catch the last segment, go back and rewind it by going to Channel 9 here at TFNN.com. Of course, that archive won't be up until sometime after today's show out there. But, we're just really taking a look at, and I just simply chose the FTSE because I'd mentioned it yesterday that I wanted to take a look at it. So we just pulled up the chart. I hadn't done anything pre-planned on it. I hadn't looked at the FTSE, but it's really a great example of utilizing a chart. People have said, hey, I don't trade currency. I'm afraid of trading currencies or this or that. And I ask, what's the real fear out there? And because, you see, if you just simply take each chart and you just look at the patterns on that and you ignore the news, you really start to understand the power of understanding what's going on technically with the market, and or where it is you should be putting on trades. And the nice thing is that these patterns that we use here, whether it's Gartley patterns, whether it's A to B equals CD patterns, whether it's the Chapman wave, whether it's the power law, swing point analysis, power law, whatever it is, these chart patterns, they work the same on multiple time frames. They work the same on different charts. It's all math computation, so it doesn't really know. When we're taking a look at this chart that's on my screen, which, by the way, is a daily chart for the euro-yen, all the calculations have no idea what it is that we're actually trading. Something to think about. Now, that being said, and that last week, last week on Thursday, the S&P via the SPY, the Dow via the diamonds, and the actual New York Stock Exchange, I knew I could get it out, the three of those made very bearish reversal patterns out there, ones that we cannot ignore. Significant topping patterns out there, patterns that we cannot ignore. Now, at this stage here, I'm neutral when it comes to the market. So I'm at the most objective point to be able to give you what I believe is most objective outlook as to what the market may or may not be doing. It's so easy to do it when you don't have any positions on with regard to the indexes out here. And that's what we're looking at. And why am I spending time on the euro, Japanese yen? Why have I spent time there? Because there is no better currency pair that correlates to the U.S. stock market indices, period. End of story. If you can find one out there, let's take a look at it. But this is the one to be using. Now, a lot of colorful patterns that are on my screen out here. And those colorful patterns here, we can forget about the patterns. Let's first go back and let's correlate what we looked at when we took a look at the FTSE versus the euro Japanese yen. Now, what I want to show you here is take a look at the euro Japanese yen right now. It is where? It is the bottom of that 14-period relative strength indicator out here. It's at a place where price would normally bounce from. And at the same time that it's down there, there are two distinct patterns, two distinct reversal patterns. One, a 0.618 buy, a Gartley buy pattern. And that's the yellow pattern out here. Beautiful Fibonacci numbers, a 0.618 retracement of B to C, expansion of 1.272. Yet price really has, and it's just been trading sideways there, so it's really an active pattern. And not too much further below is its cousin, the the 0.786 Gertley buy, right around the 137.84 level. And the likelihood is that this currency pair is going to find support at either of these levels. Now, all that we're waiting for, all that I'm waiting for, all that you should be waiting for, are the traders to get to work. That's what we call the bulls and the bears, the sign makers out there, to give us some type of sign. Does that mean that price can't get more oversold and it can't push through this area? Hey, look, price is going to do whatever it wants to, regardless of what it is that I'm looking at, and regardless of prior patterns. Remember, the past doesn't equal the future, unless you want it to out there. But what I do know about the past and the future with regard to chart patterns is that from a bullish side, we cannot ignore what it is that we are looking at out here. We've watched the market move off of the lows from 2009 in one of the largest bullish markets ever. And it's been done on what? On light volume out there, much of the time. Volume is only a quarter. It's only a percentage. It's only a piece of the entire puzzle out here. Wherever there's liquidity, it's going to push prices. In this case here, until this carry trade stops working, this can push prices higher. So we've got those very bearish patterns, the New York Stock Exchange, the Dow Diamonds, and the SPYs out there. And this is truly going to be the epic battle between the bulls and the bears out here. If you're asking me who's going to win that battle, it's who wins that battle all the time. It's really simple. It's called money. It's cash. It's liquidity. Liquidity will win that battle. And as bearish as those patterns are, I can't ignore this. This says this market wants to bounce, folks. More than bounce. We'll be right back.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's diagnostic box spread analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're off to the races. We got the Dow down 26 points, trading out of 16,486. S&P off 250, trading at 1882. Composite down 7 points, trading out at 4118. Russell 2000 giving back 4 points, trading out at 1110. Apple down 46 cents. Microsoft back 3. Lead the charge. The upside, Ophthotic. O-P-H-T. O-P-H-T-O-T. Ophthotek. Maybe that's it. Ophthotek? Maybe somebody else out there can tell me how to pronounce that, because Stevie here is just butchering that altogether. But what I can tell you, it's leading the charge. It's up 20% out here. Let me see what the deal is, if I can find anything out here. Looks like they signed a drug deal with Novartis out here. So up nice 20%, up 6%. Clovis Oncology, CLVS up 6% this morning. Aeroflex Holdings, ARX, is the ticker symbol. Looks like they are acquiring a company called Cobham PLC for about $1.46 billion in cash. Nice to have that much cash laying around out there. Google's up $1 right now. Home Depot up $1.78. Baidu up $1.29. Lead the charge to the upside, to the downside. We got Intercept Pharmaceuticals. ICPT, it's down $11 today, off 4%. Dick's Sporting Goods down 14%, off $7. TJX Companies, TJX is the ticker symbol, down about 4%. Cabela CAB down 3.5%. PT Telecommunications, TLK is the symbol out there. It's off about 4%. NTELOS. NTLS is a ticker symbol, down 12%. Urban Outfitters off 4% here this morning. All right, so the chart on my screen out here. So we took a look. We started off the day taking a look at the FTSE out there, taking a look at price, bouncing in between the upper boundary and lower boundary of its relative strength, its 14-period relative strength indicator. We took a look at the consolidation pattern that is out there inside of the FTSE, so we could put those two together. Then we went and we took a look at the Euro Japanese yen, the absolute carry trade and liquidity gauge inside of the markets out here. And what I've got on my screen here right now, for those of you that have been listeners for a long time, the bottom of the chart is the Euro-Japanese yen. I hope you can see this. If you listen on your radio or your mobile device at TFNN.mobi, thanks so much for doing that. Remember, you can always go to the homepage at TFNN.com, upper right-hand side. You'll see a button, 3 little smartphone devices on it. Click on that. You can see this show streaming live to you, and, of course, the archive is on Channel 9. The bottom portion is the Euro-Japanese yen daily chart. The top portion happens to be the S&P futures contract. It tracks the same thing on the S&P, but since we're taking a look at it, I had it up before the market opened out here. I just am using the futures. Now, what you'll see by looking at the chart, and again, it's from a directional standpoint. Correlations, most correlations really are directional correlations, and they're not a price equivalent. They're not a geometry test that you might take out there. In this case here, if you take a look at the directional correlation, look at how well, look at how closely it aligns itself with the direction of the currency pair. And the bottom chart and the top chart, when you take a look at angles, if you take a look at, in this case here, I'm going back and taking a look at a time frame in September of 2013. And in September of 2013, as lows were being made, did I say, August of 2013. As lows were being made into the August 2013 time frame, the markets were moving lower. And what the Euro-Japanese yen was doing was what? It was making a higher low. It was a divergence. In which way did the market resolve itself? In the direction of the euro. Any time that we have seen it works the other way around as well. Back here as the market, ES-mini, the S&P futures, moving higher between July of 2013 and the beginning of August of 2013. The Euro-Japanese yen was doing what? It was making lower highs out there. Who won the battle? It's always going to win the battle. In any argument, in everything out there, it's going to be cash. Cash is king. That's why it's called King Dollar. However, when you go and you take a look at correlation charts inside of the and you're looking for what's going on inside the market, it's not the U.S. dollar index that tracks the U.S. market so well. The U.S. dollar index is what? It's a basket of currency pairs. Because then you're saying it's a combination of the euro, of the pound, of the yen, of the Swedish krona, of the Swiss franc, and of the Canadian dollar. Folks, take a look at this. This is something you want to wrap your head around. Big time out here. Now, there was a definite, by the way, a definite divergence where the market here, the ES-mini, was moving higher into the May 13th time frame, and, of course, the euro was not doing that. The euro was moving lower. So it's no wonder that we saw the correction that we've seen thus far. Now, the two are, to a certain extent, in lockstep out here. The euro has not moved to the upside, so it's not signaling any kind of significant bounce in the market here as of yet. But when we go back and we take a look at where is the Euro-Japanese yen, we take a look at it. Let's go back here one more time and see where it is on a daily chart out here. And I'm laying out for you because, like I say, I'm the most objective that I can be. There, I am not, because I am neutral when it comes to the market at this stage here. I believe I can be totally objective, and we can take a look at these charts together, and we can try to figure out what's going on. And when I take a look at this currency pair, unless, again, look, it can come unraveled like we took a look at on that chart there. There are times where the chart patterns diverge out here. There are times where they diverge. But for the most part, they're doing the tango. And we just saw the divergence that took place, which is resulting in the pullback inside the market. So the Euro-Japanese yen here, it hasn't given us any kind of bottoming signal as of yet. But I got to believe in taking a look at this chart, we're not far away from that. Now, far away from that in price. In days, I can't tell you how long it's going to take. You know, a lot of small-bodied candles up here inside the Euro-Japanese yen back in the middle of April, so it could take a little while. We know what the price points are. So what I can't give you is the time frame on this. What I do know is we need to be paying attention to this. Now, of course, as you know, when you get into an overbought or an oversold condition, the way that you work it off is by moving sideways. So, if, in fact, the Euro-Japanese yen were to move sideways from here to try to make the bearish case, that oversold condition begins to work itself off. And then it creates enough energy for it to go ahead and thrust lower out there. But that's what we're looking at when we take a look at these patterns out here inside of this currency pair. If we go take a look at what's going on right now with the market pulling back a bit here, that should be expected. And why should that be expected? Well, if we go take a look at patterns, let's just simply go take a look at intraday patterns that completed out here. Let's take a look at the 120-minute chart here for the ES-mini. Let's pull that up on my screen out here. And if we take a look at it, we've got a couple of different A to B equals CD patterns that have completed. The first one off of the lows here at 12 noon on May the 15th. In fact, let me just go ahead and, since I grabbed the wrong swing point out there, let's just simply go ahead and let's take a look at it. Let's start with our swing point low. Again, that's coming in at a price level of 18.59. Let's use the larger one. Let's go. That is the A point. The B point out here coming in at 10 o'clock in the 8 o'clock in the evening, and that's on May 18th. That's at a price level of 18.7750. And the retracement, down to the swing low here at 6 o'clock in the morning. That was yesterday, and that's out at 1865.75. The 1-to-1, A to B equals CD, was 1844.25. It says 1844.29 on my screen, but 1844.25. So it completed a 1-to-1, A to B equals CD. In this case here, all the market's doing, it was not in an overbought condition. So the market right now is just simply appears to be just pausing. This level here, 1876.25, that's going to be a key level of support for the ES Mini. If price gets below that, from an intraday standpoint, it is absolutely giving us a signal that short would be the message, because what we've also got that completed out here is price was getting into that 1844 level. Well, you know what it was? It was actually a Gartley sell pattern. We take a look at what that looks like out here. Here's the Gartley sell pattern, nice 0.618. Take a look at that. Beautiful, well, almost beautiful numbers. Let me grab the actual swing point out here again. Makes it just a little bit easier. Come on, get down there. Oh, my goodness. It wouldn't do it. Anyways, it's pretty close here. You've got this, a 0.618 retracement, nice 1.618 expansion out here. If we see price get above 1884, price is going to head up to the 1889 level. If we see, in fact, price get below 1876.25, close below it, on this is a 2-hour chart that we're looking at, and where are likely areas for retracement here. If we go from the low to the high, you'll see that the dead cat bounce just takes you to 1874. Heck, a normal retracement is 1869 out here, and that's inside the ES Mini. So it completed a pattern, completed a 0.618 Gartley sell. We actually got a little bit of a sell signal right here, a little sell signal, and that was at 6 o'clock this morning. However, that sell signal got erased as soon as we were coming into the 8 o'clock session, because price just said, hey, you're a bearish engulfing, but I don't really care. There was no additional follow-through out there. So we'll see how this pattern here plays out. And that's inside the ES Mini. That's inside the S&P futures out here. Let's go take a look at the other 120-minute charts out here, and let's go take a look at what we've got. Inside what is really now the weak link inside the market happens to be the Dow. Earlier we were taking a look at consolidation patterns. Well, inside of the Dow, it's not really so much that it's a consolidation pattern as it is taking a look at this down thrusting bar that took place at 12 noon. So between 10 a.m. and 12 noon on May the 15th out here, the high of that session, 16,488. As you can see, the black horizontal line going across my screen, that has been a resistance area. Inside the Dow, it has not been able to get above that. While we saw yesterday the Russell 2000 leading things on the way up, hey, right now the Russell 2000 is leading things on the way down. The composite was second in charge there, leading things on the way up. This morning, it's second in charge on the way down out here. But the real weak link, because when I say weak link, we just looked at the S&P futures. It made a 0.618 retracement yesterday. It formed a Gartley sell pattern. And so, therefore, if we would just simply hang our hats on the island reversal pattern inside the SPY, inside the diamonds, inside the NDX 100, then the sell signal really came in this morning when price got to 1844. That was the signal out there. And that may have been the signal. It's just I have a hard time reconciling what's going on inside that currency pair, inside the Euro-Japanese yen, and knowing that correlation, and maybe I'm overthinking it, but I don't think so. I just don't think so. What we need is just simply patience. Now, if you take a look at the Dow out here, if we go from the high down to the low that came in at 12 noon, that's on May 15th, only a dead cat bounce, only a 0.382 retracement out here. If, in fact, the Dow now gets below and closes below the actual swing point out here from 2 o'clock in the afternoon, May the 15th, knowing that it's only made a 0.382 retracement, if this market is as bearish as the potential signal of that island reversal is, what the Dow futures are going to do is they're going to beeline down to the price level of probably 16,106 out there. At 16,106, let's go see what else conjoins inside that area out here. And we'll go from the swing point low at about April the 13th down at about 15,881. We'll go all the way up to the top out here that came in right around midnight time frame on May the 14th. And what you'll get at that 16,100-ish, 16,055 level, you will get a 0.786 Gartley buy pattern. So the target, if in fact the Dow is able to break through that swing point area again, that level being the price right here of 16,366. Those are the price objectives that you would be looking for. Now, here's the bearish side of the Dow futures here. The bearish side is this. We know that as price was pushing down here at 2 o'clock in the afternoon on May 15th, what was it doing? It wasn't just in oversold territory. It was what's called extreme oversold territory. If you take a look at that relative strength indicator, that rubber band was pushed all the way down to the 17-ish level, 17.57 to be exact out there. That's a stretch. That doesn't mean that it couldn't be stretched further. But if I pull this 120-minute chart back here, let me try to squeeze it back here, and take a look at each time that the Dow was able to get down to that level, down into that 17-ish range. I pull it back right here into the time frame of about 12 noon on April the 7th. And it had no choice but to go ahead and bounce and snap back. In fact, the time that it really made its high was when it got to the overbought condition, and that was back at around the April 9th time frame. We haven't seen that take place here thus far. And when we take a look at that 14-period RSI, it's just kind of in the midstream here right now. So we'll see what the Dow probably is going to really be the signal or the leader with regard to what the market wants to do, and we'll get that feel for it as it gets down to that 16,366 range. Let's go take a look at the Russell 2000. Remember, this is a delay that I've got. I could look at the index. It's not delayed. The futures contract is delayed just by a bit. In fact, let's just go take a look at the index. Let's just do that. Let's pull up the actual index, although the better signal probably came in the futures contract. But let's take a look here right now. And the key here inside the Russell 2000 is going to be what? It's going to be this swing point, this hammer candle that is formed on May the 15th. And so right now you're trading out at 1103. We take a look at retracements here from yesterday inside of the actual cash index. Let's go from the most recent swing point high of May the 12th down to the low of that hammer candle. And what yesterday was an exact, looks like exact to me, 11-16-16 is the exact 0.618 retracement number. And what it actually got up to was 11-16-04. You got to love it. 14 cents away on an $1,100 product out there. And now it's backing off. If this really is not the bearish market that we think we are in, the Russell 2000 index pull back to 1095 before it begins an A to B equals CD to the upside. We'll be right back, folks.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. We got the Dow down 57 points right now. S&P's off 5. NASDAQ's off 19. Russell 2000 down 11 points out here. So if the island reversal tops, we go back, we take a look at the NDX 100, take a look at, yes, not the NDX 100, take a look at the New York Stock Exchange. Let's focus in on that just for a bit. You had a nice bounce yesterday. Mostly, in fact, the Russell 2000 formed a Gartley sell pattern out there yesterday inside the futures contract. We saw that the ES Mini did as well. The New York Stock Exchange, not really much of a bounce yesterday. So the island reversal out here inside the New York Stock Exchange completely intact as we speak. And today, if you were to see net advancing issues, and we're not anywhere near that right now, but net advancing issues of 365 or more, the bulls will actually have taken back control of the New York Stock Exchange. Now, they can get to 365 net advancing issues, take back control, and still not do anything to violate this island reversal pattern out here. So you talk about a market that is confused or appears to be confused out here, the New York Stock Exchange. Now, right now, as we speak at 9:55 a.m. on terrific Tuesday, we've got 1,166 net declining issues out there. So that's not furthering any cause for the bulls out here, but we have a lot of time left in. That's the number that you would be looking at. So we know we've got one liquidity gauge, which is the euro. Japanese yen has not given a bullish reversal signal for its patterns that it's trying to complete out there. So no bottom here as of yet. We know it's moving into what? Moving into the oversold territory. And typically, once the bulls show up, once that pattern, it's a pretty decent move. Now, you can't measure the size of that move. It's just a directional thing, and we'll just have to let the different patterns play out here. If we take a look at the other liquidity gauge, that's the VIX index. If we take a look at the VIX right now, it's trading at 1285. If, in fact, and the 50-day exponential moving average on it is priced at 1374. So if, in fact, let's take the other side of the case. Let's assume that the SPY, the diamonds, and the New York Stock Exchange all topped. They gave us the biggest sell signals with an island reversal. And that's an island reversal that will probably last for a good period of time. There will be significant declines in the marketplace. You'll see the VIX get in line here, and it'll get above the 50-day exponential moving average. The markets will say, I don't care about your euro, Japanese yen anymore, and it'll be more like a time period back here. You see, right now we're trading at 1286. Hey, the VIX was down at about $15 and change back in the early part of July in 2011. And you see, once the VIX here back on the trading session of July 22nd, 2011, got above the 50-day exponential moving average. That, by the way, was a high back in 2011 in July during the 6-month unfavorable selling cycle out there, just as we're in here now. Oh, that's interesting. It was July when there was a top out there. We're only in May. It's only May. What is it? Today's May 20th? May 21st? Yeah, May 20th out here. But you can see here, and the real point is that once the VIX got above the 50-day exponential moving average, it stayed above it for quite some time, all the way up into the October 7th time frame. Remember, there was a significant market low that was formed back on October 4th, 2011 out there. So if this is the big one, as forget the character's name in Sanford and Son, but if this is the big one out there, then you got plenty of time to catch things to the downside out here, if this really is the big one. So those are the parameters that we're looking for. It is a terrific Tuesday. That means we got a full lineup here. Next hour is going to be the Money Masters show. That means you get me for one more hour. Now we got our man Basil Chapman. He's going to teach you all about the wave. It is terrific Tuesday. That means we've got the option hour. Then we've got Daryl Martin, David White, Andy Heck, the Tom O'Brien show from 4 to 6. Can they ask for more than that? I don't think so. Folks, thanks so much for joining me on Terrific Tuesday. Have a great day if you're out to start your day, and I'll look forward to seeing you very soon. Take care, folks.
Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.